What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we had a wild day of volatility as we saw very wild intraday swings and closed just a touch lower than yesterday's close. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.23%, and intraday we did have some volatility as the bears tried to push SPY down there to close the gap. But we did see buyers stepping in at the top of the gap at 371, and we are starting to see buyers of the dip in this market once more. Now in the short term, we are starting to see higher lows and higher highs on the hourly chart, but we are coming into some very critical resistance on the daily chart, which is going to be the zone around 380 to 381, which is our resistance trend line and our 20 simple moving average. Remember, this is still a possibility that this is just another lower high before the next lower low on our way down to SPY 350. So you do need to be prepared for the possibility that we do get rejected from that 20 simple moving average and still go make that next leg lower. Now in the scenario that this is going to start reversing the downtrend, we are going to see this turning into a higher low followed by another higher high. And that is going to tell us from the price action that we are getting confirmation that the downtrend is ending. So whether or not this gap fills now or it fills later, we are definitely seeing a shift in sentiment as there are definitely bulls out there buying the dip. And that is how we were able to stop the bleeding with the intraday selling and still close the day only down 0.23%. So watch this critical support zone right around 373, the gap fill at 368.55, and then the June closing lows at 365.86. As long as SPY is above 365, there is a real possibility we get a higher low before the next higher high. So that is a great risk level to use for long trades. But the most critical risk level is going to be down here at the 200 weekly simple moving average, which is roughly SPY levels of 358. Because if we break down below that level, we know we could be entering a secular bear market. Now in the event we get the bullish breakout above the 381 resistance zone, you'll be looking for that critical resistance and risk zone at SPY 390. That's also going to be the 50 EMA and the resistance trend line. So that is definitely going to be a very strong resistance. And you could argue the bear could be moved down to this level because of how critical that resistance level is going to be. So as we climb, do not forget we are still in a downtrend, even though in the short term we could be getting some hints that we are starting to reverse it. On the NASDAQ 100 triple Qs, we were down 0.05%. And intraday, we nearly closed the gap to the downside at 275. But again, we saw a lot of buyers of the dip stepping in, and we came all the way back up to rally to the resistance at 284 before finding some sellers. So right here on the triple Qs, you have this critical resistance at 284 and the 20 simple moving average just below 286 and the resistance trend line just below 288. If we can break all of that resistance, the next critical resistance will be that risk level at 293 and the 50 EMA just above at 294. So again, this is still possible. This is a lower high before we go down towards the price target at 258. So again, these are still in downtrends, and as you can tell, the triple Qs is still in the downtrending channel until we break the resistance trend line. Downside support levels will be 280, the gap close at 275, and the June closing low at 271. And of course, that price target that we bounced from right around 267. On the Dow Jones, we were down 0.12%, and the Dow Jones found support at the top of that gap right around 298.5, and we did hit the resistance at the 20 simple moving average at 304 intraday, and we did find some sellers at that level. If the Dow Jones breaks down below 298, look for the gap fill at 296.37, and then the support levels will be 293 and the closing low at 287. Don't forget, we still have the elephant in the room of the weekly gap close at 285, which is still open. And we do know that weekly gaps typically get filled. So there's still a good chance that we are going to fill that gap before we call this bear market over, or we will continue lower to the next price target at 276. On a break above the 20 simple moving average, look for resistance right around 305.8. The resistance trend line at 308 and the critical risk level in 50 EMA at 312. On the Russell 2000 IWM ETF, we are down 0.74% as the small caps did start to close some of the gap to the downside, but we still do have the open gap at 170.3 and the upside resistance at 174.7 and the 20 simple moving average just above 175. The resistance trend line and critical risk level of resistance will be right around 178 and the 50 EMA will be just above that at 179. If we close the gap to the downside and continue lower, look for support around 168 and 163.75, and if we break all of that support, the next leg lower will be 159.5. On the ARKK ETF, we were down 1.84% after we see ARKK reaching resistance yesterday right there at the resistance trendline, and today we're right back down to support at $40 and still holding above that level. If we break the support at 40, look for the next leg lower at 37.7, and below that we'll be testing the June lows at 36.5 or making the next leg lower at 33.7. On a breakout above the resistance at 41, look for a retest of 43, and then we could run all the way back up to 45.7. On the VIX, we were down 1.72% as we see the VIX with the second day in a row closing below 30. But we are still in a situation on the VIX of higher lows and higher highs, so we cannot say that volatility is gone until the VIX crushes all the way back down below 24. Again, volatility works in both directions, so just because the VIX is elevated does not guarantee we need to go lower. So do keep that in mind and respect the fact that the bulls can crush the VIX to continue the uptrend. On Bitcoin, we're currently down 1.61%, and Bitcoin did get the bull breakout confirmation above the resistance trendline with yesterday's close, which just required a close above 20,000. Today, we're finding resistance at the 50 EMA and backtesting the breakout of the resistance trendline as support, which is going to be right around 19,800, and so far we are holding that level of support. So if you zoom out and get a bigger picture on Bitcoin, we are still in the downtrend, but we were wedging down into this point where we were about to see a breakout, and so far the bulls are getting the breakout. The critical risk level is still 19,000 because below that we could come back down to 17,000, but while we are above 20,000, you will want to stay bullish for the possibility of testing the previous daily high just above 22,000, and if we can break above 22,000, then we can start entering a bull trend on Bitcoin. On Amazon, we were down 0.12% as Amazon did find resistance yet again at the negatively sloping 20 sample moving average, and we have gaps to fill to the upside and the downside. Look for resistance right around 122 and the gap fill to the downside just below 117, and we still have support right around 113 to 115. If we lose support, look for the next leg lower at 106, and if we get the bull breakout above resistance, look for the gap fill just above 125. On Microsoft, we were up 0.13% as Microsoft has the second day in a row closing over the resistance at 242 and the second day in a row closing back over the 20 simple moving average with the nearest upside resistance at 252 and then the 50 EMA at 256. If we lose the support right around 246, look for the gap fill at 242, which is also going to be the support zone. Below 242, we could come all the way back down to retest the lows around 233 or make that next leg lower at 231. On Nvidia, we are at 0.32% as we see a continuation of the bounce on Nvidia in the second day in a row closing back over the 20 simple moving average. Look for support right around 130.6 and this gap fill right around 125, and you're getting risk off if we break below support at 122. Above resistance right around 135, we can get the bull breakout and we could go hit that price target, which is the gap fill at 142. On Tesla stock, we were down 3.46% as Tesla is getting very close to the downside double top price target at 231. And I do expect to see that being very strong support because Tesla is getting a little too far extended to the downside. This is the third day closing below the lower Bollinger Band, so a dead cat bounce is getting increasingly more likely, which could bring Tesla all the way back up to fill the gap at 262.47. On the way up, look for resistance right around 251 and 258.6, and if we continue to break down below the price target at 231, we could go as low as 218.73. On Apple stock, we were up 0.21% as Apple bounced all the way back up to the resistance at 147 and so far has not yet closed above that level. If we get rejected from resistance, this could still be a lower high before the next lower low, which could take us all the way down to 136 or 133. On the way there, we could have support right around 141.7 and the previous closing low at 138. And if we break the resistance above at 147, look for strong resistance at 150. On the financials, we were down 0.77% today as we got rejected from the negatively sloping 20 sample moving average, which could mean we could get rejected from here and go fill the gap to the downside. So far, this still looks like a bullish island reversal, so if we continue higher, look for resistance at the 50 EMA. The industrials were down 0.54%, also getting rejected from the 20 sample moving average, and on a break above that, we will be looking for the gap fill to the upside at the 50 EMA, and if we continue lower, we'll be looking for the gap fill to the downside at 86. The healthcare sector was up 0.33% today, coming all the way back up to the 50 EMA, but finding sellers at that level. A break above this level will be bullish for the gap fill above at 130. The energy sector was up 2.07% today as we see the energy sector continuing to close above all the moving averages and starting to develop a bull trend. You can now stay bullish on the energy sector while it's above 79. So jumping back over to the S&P 500, today was a very volatile day and it did prove there are buyers of the dip at these levels and we are starting to see an end to the buyer's strike. That doesn't guarantee we can't go lower from here, so know your critical risk levels and do understand on shorter time frames we are starting to see higher lows and higher highs. Remember, trading is always about risk management and knowing both scenarios and then letting price action do all of the talking from there on how you should be trading the market. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. If you want to learn more about Bank or want to subscribe, you can click on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.